Hello traders, welcome to the 6th module of the Advanced Technical Analysis course, Oscillators. In this lesson we're going to teach you all about the MACD, how to use it to trade and how to use it to spot momentum building in your price action charts. Remember that momentum is important for price to move in your direction quickly, and this indicator will help you to spot the actual setups that will take price in your favor. Let's start by first defining the MACD. MACD stands for Moving Average Convergence Divergence, and it's a trending and momentum indicator. The indicator uses a MACD line, a signal line, and a histogram, and the signal line is actually a moving average of the MACD line itself. Convergence occurs when the two lines move towards each other, and divergence occurs when they move away from each other. And you will notice that the more divergence exists between the two lines, the higher the histogram is building. This means that when the divergence occurs, we have momentum building. The histogram shows you the speed of the move or momentum. Like we said before, you will notice that you have a histogram building up or down when the two lines are farthest from each other. When the two lines start to move towards each other, the histogram starts to build down towards the zero line. When the histogram starts to build above zero, it means that momentum is building to the upside. In this case, for example, you see that the histogram starts to build to the upside at the same time that this big blue candle starts to appear on your chart. This means that momentum is building to the upside. And on this case, when this candle starts to appear to the downside, you can see that we have divergence from the two lines and we have momentum building to the downside because the histogram is building below zero. When the MACD line crosses the center line, we have shift to an immediate bull market. In this case, you can see that when the MACD line crosses below the zero line or the center line, we have switched to an immediate bull market. When it crosses back above it, we have switched to an immediate bull market. Now, this is the overall looks of the MACD. Now let's go to see the actual setups that we will be looking for with this indicator. First of all, for a bull setup, and we have to be clear on something. Unlike other oscillators, we are not looking for extreme readings. This means that we are not looking for the MACD to be above a certain level or below a certain level, because the MACD does not show you overbought and oversold readings. It shows you the momentum in price. At a support zone, we look for the signal line to cross above the MACD line. This is what we call the MACD crossover. And we also need momentum to start building to the upside, meaning that once we have hit an area of support, we will be looking for a signal line to cross above the MACD line and the histogram to start building to the upside. Here's an example. You can see that here we have come to a support level, and then we have a signal line crossing above the MACD line, and we have momentum building to the upside. Here we have a great opportunity to go long, and of course our stops should go always below the previous low. And in this case we have a winning trade, and we can exit actually the trade when the MACD when the signal line crosses below the MACD line and momentum starts building to the downside. And as you can see here, by doing this we have caught the best of the move up. In a bear setup, at a resistance level, we look for a signal line to cross below the MACD line. The histogram will start building to the downside to know that the move has enough momentum to take price down. And here's an example. Another Facebook chart, a 15-minute faithful chart. You can see here that we have hit as a big area of resistance. And right here we have the signal line crossing below the MACD line, and we have momentum building to the downside. We go short, and here we can take out our position when the signal line crosses above the MACD line and momentum starts to fade and build to the upside. And as you can see, we have taken a nice dip on this move to the downside. So the setups with the MACD are very easy to spot, but you need to use strong support and resistance areas as confirmation of the actual MACD crossover. And of course, you need to always look at your histogram, because if the setup or doesn't have enough momentum in it, price will not move in your favor and it will start to chop.